You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views. This is, of course, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from the Options Insider Radio Network. And I know a lot of you out there have been bugging us and badgering me, saying, when are you guys going to get a mobile app for your radio network? Well, thankfully, it is here. It launched this week on Wednesday. We launched 3 versions, one for iOS, one for Android, one indeed even for you guys out there who love the Amazon and Kindle Fire stuff. So you can find links to those on theoptionsinsider.com or go to your app store of choice, the iOS App Store, the Amazon App Store, or the Google Play Store. Search in the app section. Just type in Options Insider, Options Insider Radio. You'll find our app right away. And then download it, and you can access all of these great shows as well as send us feedback. You can download them for offline listening down the road on a plane or in the car or subway or something like that. Should be really, really fun for all of you guys who've been looking forward to this. So check it out and let us know what you think. Take advantage of that contact tab in there. You can give us your feedback on the app as well as get in touch with us for the shows. You know, you guys love to send us questions and comments. So go ahead and try that out. The Options Insider Radio Network mobile app on the device of your choice. So check it out. And of course, joining me on the old Volatility Views program today, my cohort, my partner in crime, none other than Mr. Mark Sebastian from Swan Wealth Advisors and OptionPit.com. Mr. Sebastian, welcome back to the show, sir.
Hey, how are you?
I'm doing good.
How's the world treating you?
World's treating me pretty well. Just busy doing app work, as you might well know.
Oh, yeah, no, I mean, kind of an interesting day today, huh?
Yes, it is an interesting one. Yet another day where we're seeing some. It's just been a great week for vol across the board, you know. So I think maybe we'll just cut it right there and just save it for the vol review because there's so much to get into.
Crazy week.
So without further ado, let's just dive right in to the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the program where we break down the week's worth of action, the week that was, from a volatility perspective. And what a week it was. We saw it start off towards the end of last week into last week's sessions with an aggressive sell-off and the VIX kind of popping a little bit, but perhaps not as much as some of you out there may have expected who were loading up on all those upside VIX calls. And then we saw coming into this week, we saw more of, I guess, the correction. We saw continued correction earlier in the week, and vol continued to creep up. And then finally, apparently, The worst is over. All of the fears have been allayed, and we're rallying. As we're recording this on Friday here, February 7th, we are rallying yet again. The S&P up about 1%. VIX cash selling off about 11.5%. And the good old VXST, the upcoming VIX short-term future, selling off about 22% on the day. So yet another argument for why it's interesting to have a short-term type product. If you want to learn more about that, stay tuned for our Volatility Review segment. We'll have a great conversation with Jay Caauwe. He is the head of the CBOE Futures Exchange. I think you're going to be interested in that conversation. But first, Mark, let's look back on the week that was. I don't even know where to start. There's so much craziness going on.
It was an interesting week. We had the VIX. We had a disgusting. You know what? Interesting. The Vox guys would be all over this week because realized vol really exceeded implied vol by a lot, a long shot.
Yes, I can hear Don yelling into his computer right now, saying that exact thing.
Big days, and Don would be all over this. But the big piece is so on Monday we got a 40-point down day, but the VIX, and we talked about this on Option Block, the VIX really underperforms, right? Then the next day we get a tiny little reprieve, and the VIX gives away everything it made the day before, and it's been kind of downhill since. I'm looking and I'm wondering whether things have gotten a little overdone. But I'll tell you, to go from basically in 2.5 weeks, we went from a VIX of 12 to a VIX of 21 back to a VIX of 15. So it has been nothing but crazy. And you know what's interesting is that the Russell 2000 has really been leading the way for the market, both from a direction and volatility perspective. When the market's been moving hard, one way or the other, it's always been you really looking at the Russell was telling you if it was for real or not.
Yeah, that was always part of their main selling point for that product is that it has that quote unquote vol premium to some of the other products out there, like the S&P products, and it certainly exhibited that with a little bit more aggressive moves to the upside and to the downside this week. And you're right, it was one of those weird days this past Monday where we had this sell-off, VIX coming up to the upside. We've talked about nothing on this show over the past few weeks, but continued record levels of open interest in VIX calls, like ridiculous levels, 3-to-1 plus. VIX is always call heavy, but it was well beyond that. We saw one or two savvy customers coming in and selling some upside, doing some nice overwriting. That seemed to work out pretty well for them. But in general, people were just gobbling up VIX upside like it was going out of style. And what we saw is kind of almost a bit of a cliche now, is that it comes up and it touches on those levels, but it never really gets to the point where it really needs to make all those. Certainly not the crazy bets, but not even the crazy bets we saw in Feb. Some of the nearer term bets we saw in Feb really come to fruition. I think there's a lot of people out there right now who think they did the right thing, putting on some VIX upside either for a kicker or for, hopefully not for a hedge, but hopefully for a kicker. If you're listening to this show, you're a little bit more savvy. And yet it just didn't really come to fruition the way they wanted.
No, really just a screwy week. I'll be interested. So I'm guessing we're having another big rally today. I'm guessing it's got to be that we're back to good news is bad or bad news is good news. But I'm just not sure if that continues to work, and we're not 100% certain that the Fed's on board with bad news is good news. So I'm surprised that they took volatility down this much, and I'm surprised the emerging markets are liking this stuff from us so much. It's really shocking to me.
Yes, as we're recording this, you're right, VIX cash off about 2 handles, just interesting. You're right, just aggressive moves to the downside. If there's been any momentum at all in VIX, it's been clearly to the downside. People want to just crush this. Maybe it tails back to that mindset everyone kind of had at the start of the year that we're in rally mode, volatility is going to be coming off, we're in the doldrums, and then we had this little bit of a spike, this little bit of an aberration that kind of broke us out of it, and now everyone's trying to get back into it. But the trade of the day was definitely selling whatever your vol product of choice was. If you wanted to sell the VIX futures, or if you wanted something that shorted you vol at that pop.
VXX made basically a 10-point move in 2 days.
Yes. And that gets back to the short-term nature of that product. That's a good use case for VXX. You want to use it to do some near-term scalping for whatever reason. You're scared of the futures.
How many and of course it went just to the point where basically everybody had to puke it, and before it could turn back around. To the
predictably crappy nature of that product, right?
Yeah, no, but you'll make money, and then it will absolutely destroy your life.
Yes, if you hold it for more than 2 or 3 days, then I think you're kind of begging for some sort of ruin on that end. But if you hold it for a day or two, that's kind of what the use case of that product is for. If you don't go any longer than that, I don't know. Maybe you've seen some different studies, Mark. I've seen some studies that estimate the the roll risk on that product is up to like 14% a month. So if you hold it for any kind of lengthy period, you're getting just crushed on rolls.
Yep, except for when we're backward, and we were for a couple of weeks.
Yes, we had a brief period of backwardation, so that actually kind of worked out for something like VXX. So again, another reason why something like that would be good in a week like this.
Right now, the term structure is still, you've got Feb is still at 1540, March is 1580, and the cash VIX is 1520. So it's still a very, very tight curve, and it is not giving the all clear at all.
And if you know anything about VIX term structures, that is not exactly a usual case for the term structure of VIX. Let's just put it that way. And of course, how great, Mark, would it have been? I know we're going to get them next week, but how great would it have been to actually have VXST actually trading this week? Because that was where the action was this week.
Would have been nuts. Would have been great.
I'm certainly going to put that to Jay in a few minutes. Maybe tease him a little bit to say, hey, how come we couldn't have you product a week earlier?
Well, the research guys were really working hard on it. And, I did a Bloomberg discussion on VXXT. And, if the VIX is the fear index, the VXST is the panic index.
Yeah, VXST it's all going to hell. Get your go bag.
The panic everybody is pushing the panic button. So, that's the way I would flip VXST if I'm CBOE. They've already got the fear index. They need the panic index, and that's what VXST is.
I like the go bag index, and that might not be a bad one to go with. Of course, if you're doing that, then you're not really trading. You're panicking, getting the hell out of town. So
exactly, it's the old
the S&P 500 puts or whatever. Yeah,
they call you're puking your short position index.
Yeah, as all the guys used to write, like the 400 level puts in the S, and they say, hey, if we get down there, we got other problems than paying back these puts. All right, good stuff. Thank you, Mark. And now we're going to keep on rolling right on into our volatility review segment, where I'm going to chat with Jay Caauwe from the CFE about this exact stuff, including VXST. So stay tuned for that.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Volatility Viewpoint. As the man said, this is the portion of the program where we welcome on a variety of thought leaders from throughout the world of volatility and proceed to pick their brains for the benefits of you, the listener there at home. And today's guest is, it's been a while since he's been on this program. He's been on the network in the past, somewhat recently, but not on the Vol Views program in quite a while. So let's welcome back Jay Caauwe. He is the managing director over there at the CBOE Futures Exchange, the home to so many of the products that I know you guys out there listening love to trade day in, day out. Jay, welcome back to the program.
And a pleasure to be back, Mark. Thanks for having me today. I appreciate it.
I'm glad you could curtail your international travel to join us here on the program today.
Well, we could have done this remotely. Actually, we are doing it remotely, so I would have been happy to dial in from any remote location.
Well, for you guys over there at CFE, this is boom times for you guys. So I'm not surprised that you guys want to trumpet it wherever possible because, in a time when otherwise, in the rest of the derivatives landscape, the story may be a little bit more mixed. It seems like the one lone bright spot I see time and again is VIX, in particular the VIX futures and to a degree the VIX options. You guys are just lighting up the tape. It seems like every month we're coming hot off the heels really, of two recent records for you guys. First you had 2013, of course, a banner year for you guys over there at the CFE. I think you hit nearly 160,000 ADV last year, which is just crazy talk in and of itself. Is this kind of just blowing your mind? I know you've been there for a while, but to see these kind of numbers, I know when these products were first launched in 04 and that time frame and into 05, and people were kind of figuring out who would be trading these things and what the use case would be for them. Did you ever imagine that it would be hitting numbers like we're seeing today?
Absolutely. You have to have faith when you take on a project like this, and we knew that because VIX has its nuance, that it would require a little time, and most of that time would have meant the educational side of it, because face it, you and I have talked about this before, VIX itself is kind of a funky concept. And if you really, go down deep in the weeds, you're going to be able to wrap your head around it and understand why an allocation to volatility in the form of VIX is an important component of trading strategies. And frankly, I think it's the one product now that offers that healthy diversification aspect. When we look at and read and see in the news about commodity desks being shut down across various banks, well, find me another product that offers the diversification that VIX futures do. So I think bringing up a product, whether it's VIX or any other product, is a lot like raising a child, right? You have to have faith. You have to go through some of the obstacles that are presented and the little hurdles and setbacks. But the mantra we used to have back in the day is if we knew we got to 20,000 ADV, 20 would get you 30, 30 would get you 50, and it was just a matter of time before we converted a lot of people over.
And, of course, we're coming again off the heels of January, which was pretty much a crazy month by any measure, certainly from a volatility perspective. And that's, of course, feeding back into you guys over there at the CFE. Again, you reported that you did hit the 4.4 million contract month for January. Again, just crazy, crazy numbers coming out over there on the future side over there at CFE.
Great stuff. And while there was a little more volatility in the marketplace in January, let's not rule out, how we finished up the year in 2013. And if memory serves me, I think October was our third most active month, if I'm correct. But yet we were somewhat mired in a kind of stagnant volatility regime, probably between 13 to 15. Yet we kept on putting up these banner type of numbers. So I think it really speaks to the maturity of the product. I also think it speaks to the acceptance of the product. And, folks out there say it is a asset class, volatility, and I'm not going to dispute that.
Why would you? It keeps you getting these numbers like this, right? It's a perfect perfect storm. But you're right. It wasn't people, January is pretty easy to chalk up to the fact that it was just, a crazy month. So you're going to have some action and volatility products in a month like that. But you're right. For the bulk of 2013, we were in kind of that volatility malaise, and it wasn't what you would typically determine to be, hot times for vol products like yours, and yet they continue to just keep setting ADV records and keep setting volume records across the board. Do you think that's exactly what it was from? It was just from these institutional funds starting to buy into the fact that vol is indeed its own asset class. They're starting to see traditional sources of diversification, your commodities and others, not really perhaps performing the way they might have expected in the kinds of markets we're having right now. So they're looking for something else that has much more negative correlation. So they're starting to accept it overall. Is it retail coming on en masse? Is it kind of all of the above? What do you think kept those numbers growing even in kind of the stagnant periods we saw last year?
Definitely all of the above, and it certainly doesn't hurt when you have BlackRock issue a paper about incorporating a volatility component and how important that is now in terms of the success and the health of a balanced portfolio. So when you look at the fact that you're kind of mired in this sideways vol regime, and again, as you note, continue to put up these types of numbers, well, I think that speaks to the fact that we are attracting new users and new users coming from many different walks of life. And, a tip of the cap to the ETP universe out there. They certainly are quite instrumental in promoting volatility as an asset class to the masses, as well as through the structure of those various ETPs, more or less guaranteeing that there's going to be flow coming back to the VIX futures. But I think it's reached a point now where the VIX futures are a mature product that do well with users who may not even have an interest or an allocation to the universe of ETPs. In other words, there are folks who just like the fact that the vol is such that they can day trade the heck out of this product.
I'm glad you mentioned the ETPs because that certainly has been another interesting story in VIX land. Who would have thought a couple of years ago that a product like VXX, which is clearly a ETF geared around the VIX futures, would become on some days, the number one exchange traded product by volume out there across all of the exchanges. So clearly there's some resonance for this asset class as a whole. And, I think in the past there might have been some viewpoint of maybe these products are perhaps cannibalizing what you guys do over there at the CFE, but it's clear now, looking at the way, you're right, they carry the message to the masses, the way things like VXX are clearly resonating with retail, that a lot of that seems to be rubbing off on those customers, and they're starting to migrate to the quote-unquote big stuff, to the big future. So not only are they driving volume from a pure hedging capacity in their own structure, but also perhaps serving as a point of entree for some of these new users who can then graduate on to wrapping their heads around the term structure of VIX futures and trading those as well.
Yeah, I think that's certainly the case where you can see some measurable impact from especially the retail segment of the volatility player going to VXX mainly, and this is kind of our anecdotal evidence or anecdotal analysis where, face it, I mean, everyone's got a securities account, right? Not everyone has a futures account, so the ability to get into a product that has a smaller contract size but still gives you that exposure to volatility, it's going to be certainly, I think, easier for some folks to be able to do it through their securities account rather than try to set something up through an FCM brokerage. That being said, there's definitely some follow-through on that flow going to the ETPs that we definitely benefit from. But again, I have to hit upon the fact that there is significant amount of trade that we see that we somewhat have determined that is independent of what goes on in the ETP space. So, for instance, if we are able to identify CTAs as users, one might assume that CTAs are probably not trading any of the ETPs out there, or maybe not to the extent that someone who's more of a market maker would. So when CTAs start using VIX futures as a short-term overlay strategy, I think that's totally independent of what occurs when folks are looking at VXX versus VIX futures.
So you're seeing a larger influx of CTAs into the product as well. That's interesting because it's not a traditional audience you would associate with this, but that kind of speaks to what you were saying before about the growing acceptance of volatility itself as an asset class. If these CTAs are coming to this product, that's clearly probably the use case they're looking for with it.
And in fact, we just wrapped up a conference in the UK last week. It was a CTA intelligence conference, or that's how it was branded. And probably the better populated of the panels was the one that we presented on volatility. And two of the four panelists were CTAs who have recently entreed into the volatility space because they're starting to see the impact of having an allocation to volatility. And frankly, they're treating it as a commodity, as any other CTA might.
Yeah, that's always been kind of one of the preferred use cases for it that you guys I know have been putting out there for quite a while. It's interesting to see that the CTAs are starting to wake up to that fact when they're looking for sources of diversification and asset allocation. They're starting to see vol as one of those categories. It certainly just makes you even more motivated over there to keep working on things like the GVZ as well. Of course, the commodity type vol products, because I'm sure those types of products would really resonate with an audience like that.
And the thing that's going to help us now with GVZ and EWZ and the emerging market and the oil product will be the fact that volatility has become a lot more mainstream. Certainly the CFE as the division of the exchange here has been growing in terms of staff additions. So we're going to be able to focus on metals desk, energies desk, emerging markets desk. So it's going to be much easier for us to kind of target who we really need to promote and market a gold volatility product to versus an oil volatility product to. Again, I think what works in our favor is the acceptance of volatility, the understanding of how to trade VIX, the nuance of term structure plays, right? Because there is volatility in the gold market. When gold moves to the upside, so that inverse correlation that's persistent between VIX and the equity market may not present itself as often during or in the gold product, but certainly opportunity does exist. And again, I think it comes down to people want to have an allocation to volatility, period. But, going back to what we were talking about, the acceptance and the maturity of the product, I mean, that allows us to really kind of stretch our legs a little bit And never is that more so evident than phase 1 and phase 2 of our extended trading hour rollout, right? And I know you're familiar with that because we talked about that at the end of the year.
Yes, you guys have been steadily adding to the trading day to kind of line it up more with what we're seeing overseas in terms of trading hours. And it seems like, and obviously I'm just looking at it from the outside, the actual numbers, but it seems like from looking at it the outside that there actually has been a decent amount of uptake in those trading hours. Is that your come away from it as well?
8% of the VIX futures trading, again, 8% now takes place outside of regular U.S. trading hours. So you sit down and think about that, and you go, oh, well, that's pretty cool. Is it incremental, or is it done at the expense of the regular trading hours? Well, you look back on action earlier in the week when there was follow-through from the market downturn last week, and we see the volume that goes through at 2 a.m., which, of course, mirrors the start of the London Open. And if we see an uptick in volume then, in addition to our average daily volume through January increasing, then I have to say that's some decent incremental growth to the entire trading day. So I don't think I don't see the extended trading hours succeeding at the expense of the regular trading hours. That's not our sense at this point because, again, we know that there are people who are trading the product outside the domestic boundaries of the U.S., and hey, why not make it available on a more native time zone, especially if there is overnight action occurring in Europe that they need to be able to get to our product. So again, it comes down to let's make it available on a more global scale, around-the-clock scale. So I'm sure you've seen the press releases and heard about the plans that this 2 a.m. start will probably roll back and increase to the extent that by year's end, I would fully expect it would look something more like 23.5.
I was going to say we're getting to the point where VIX is going to be almost 24/7 at that point. So that'll be interesting. You can get your VIX fix 24 hours a day.
Get your fix on VIX. I like that.
There you go.
I like that. And that fix on VIX too. I mean, also really compels us to take note of what our users are saying in terms of what they feel would complement or augment their current style or strategy. So that takes us to VXST. So next Thursday, February 13th, is the launch for the VXST, the short-term volatility, and that's going to be tied to SPX weeklies. So now you're going to have the ability to trade the 30-day product or a 9-day product. Why is that important? Well, because a 9-day product is going to allow you to be more precise and kind of pinpoint around some type of economic news or corporate action. So case in point, when you look at when S&P downgraded U.S. debt back in 2011, on that particular day, I think it was the VXST, rose, I want to say nearly 80% on that particular day, while the VIX index, of course, you would expect it to spike, but I think it was only up 51% on that particular day. So now you have two different measures of volatility, two different barometers of volatility, one allowing you to really get a lot closer to the actual event. But now you're going to allow market participants to explore and examine certain strategies, term structure strategies, maybe play week 1 against 3. Maybe there'll be some backwardation across the weekly expiries because, as you know, there's persistent contango in the 30-day product. So I think it allows for our supporters to really explore the volatility landscape a lot more succinctly.
So first off, then, you guys are still on track for a Feb 13th launch. Everything seems to be in place for that?
Yes, sir.
Well, that's good news. I know for a lot of our listeners, that's definitely product number one from you guys that they're really very interested. Clearly, there's been a huge upswell of interest in just the shorter duration products across the board, the weeklies and the equity options into the index options, and it just makes sense that eventually there would be some sort of vol product that would fit neatly in a portfolio alongside those types of products in a portfolio as well. So I'm sure that was probably the big impetus for you guys as well, having something that fit alongside that kind of short duration trend. And you're right, when you listed all of the weeklies in that full strip, the diverse array of strategies that opened up really kind of became fantastic to watch. People trading, ratios, one versus week 3, and they're financing week 1 with other things and vice versa, financing week 3 with week 1 and then week 2, and a lot of great things you could do with that. And this launch of this product kind of opens the doors for that in VIX as well. And I'm really looking forward to seeing what types of strategies emerge between, let's say, SPX Weekly and the VIX short term, and then the VIX short term and the quote-unquote big or regular VIX product. There's so many ways you can really carve that up. It's going to be interesting to watch, and I'm sure you guys are pretty excited about watching that stuff unfold as well.
Yeah, and certainly weekly products in general have been widely embraced and quite successful. Our SPX weeklies have been one of the major talking points in terms of weekly products out there. And I think earlier discussions you and I had, we agreed that traditionally option players are, premium sellers, right? So would we expect to see that in a weekly future? I don't know. I think they're going to explore it a little more. I think they're going to do things like we talked about, look at term structure plays, capture time value decay on the shorter term index, play those weeks against the 30-day product. So I think it really allows for a whole new scheme of trading to come into the product set. And you're right, it's going to incorporate not only the SPX weeklies, but SPX, VIX options, and VIX futures, of course. So we are responding to the needs and the demands of our market participants, because in general, I think folks like having weekly products out there, but more particularly, I think they like having something that's a little more sensitive to near-term moves in volatility.
You're right. That's kind of one of my interesting questions as well, is the weekly products have clearly catered to a certain segment of the options audience, which is predominantly premium sellers. They love to harvest that theta. That's kind of what the weekly is for them. And yet the VIX options traders in particular have always been a little bit of different mold. They usually lean towards premium buying, usually in the upside calls. That's kind of where they like to play. They put them on for portfolio kickers. They put them on sometimes as hedges, although we've gone back and forth on the validity of that on this show in the past. But that's the use case, gobbling up upside calls. So it will be interesting to watch when this nearer term product comes out, what use case actually evolves around it. Are those same premium buyers going to migrate into the nearer term stuff? Certainly, you could argue on a week like this past week we have. Listeners are recording this here on Friday, February 7th. We're looking back on a week that was just action-packed from a vol perspective, and this would have been a fantastic week. I know you guys don't control this stuff, Jay, but it would have been, how fantastic would it have been to have VXXT trading this week?
Oh, I know, and there will be some future fantastic weeks out there, too, because volatility in the marketplace, I don't think is going to abate anytime soon, and we'll see some little pullbacks, but that product will be out there, and the options to follow will be out there when we have these next type of volatile moves, whether that's geopolitical or otherwise, so we'll be ready.
Yeah. Your luck. It'll February 14th until April. It'll be the complete volatility malaise, and we'll sit at 10.5 in VIX cash for the next 2 months. But getting back to the point you were,
there's nothing wrong with that either, because that's going to allow, I think, folks to kind of explore the landscape in a little more, let's call it simulation type of environment.
Relaxing environments.
Yeah, exactly.
I like it. Ever the optimist, Jay. I like it. That's why we like having you on the show, to counter my deep-rooted cynicism. But, as you were saying earlier, kind of today is another great example of the point you were making about the vol of vol, particularly in this near-term product. We're looking at a day today when the market's up about 1% in the S&Ps. VIX cash right now is selling off about 2 handles, or about 11, almost 12%. The VXST is off nearly 4 handles, or nearly 22%. So nearly a 2x move in terms of what we're seeing in that near term. So that kind of gets back exactly to what you were saying, and the incredible utility of that product like that in a week like this. It's going to be really interesting to watch that unfolding and see what people... I'd imagine if this is the way it keeps playing out, there are going to be a lot of premium buyers out there, because it's going to be pretty darn scary to sell this thing on a regular basis.
Yeah, you got it. And, you used a word that I'm very keen on, too, is utility. And I think that's what VIX has become. It's become a product of choice, and it has a lot more utility than just a directional punt on where vol in the form of VIX is going to head. So, again, going back to the mantra I use, and that is, at this particular point in time, 2014, more people know why they should be trading VIX. Thank you, 2008. But probably more important than that is how to trade it. So they've taken the time to understand it, which I think gives VXST certainly a leg up, because it's not a foreign concept. It's based off our methodology of VIX. It's using weeklies, which the marketplace has familiarity and comfort with at this point. So it's incorporating the dynamics of very familiar products to our market participants.
And, again, it would have been fantastic to have it trading this past week, because you're right, it is getting a little bit more movement. And we're seeing a lot of the listeners of this show, and just in general, listeners to this network and visitors to the Options Insider, kind of a little bit underwhelmed with, I guess you can call it, the big VIX and how it played out over the past week. We saw a lot of people really piling into that upside, and of course gobbling up futures as well from a VIX options perspective, and indeed the futures. And then the actual resulting pop we got, I think a lot of people were, shall we say, underwhelmed. So a product like VXST that could have had a little bit more bang for their buck, I think that certainly would have resonated with a lot of them. It probably maybe mitigated some of the outcry we're seeing now of people saying, why didn't we get more for all of the upside that we gobbled up here on VIX? So in a week or so, Jay, you'll have an answer for them.
That's right. Nothing like a little history or a little back data to rely upon. But to your point, I mean, wouldn't you agree that given the scenario you just described, VXST is going to be the perfect complement and augment quite well the 30-day product, and vice versa, given the particulars of the market environment at any given time. So during a period of, a placid market, or where we're just kind of listless, my guess would be that the 30-day product would be one that we would be accustomed to seeing the flow come through, and then people may position themselves around particular U.S. economic releases, unemployment, PPI, that sort of thing, perhaps even around earnings news, that sort of thing. So I think combined, they help broaden the appeal.
And, we talked about the ETPs before, but I think a product like this also is very well suited to something like a VXX, because the key problem with that is that it's a very, very near-term product. If you hold it for any length of time, you get crushed by the roll risk. So a near-term VIX product makes sense with a VXX, because that's kind of the ideal use case for both.
Exactly. So what we're doing is helping to create this global asset class known as volatility, not only by introducing products, but by making our products more available on the global time scheme.
Of course, we are here on the Volatility Views show, and we are partnering with our friends over there at Russell on that. We've had Pat Fay on from Russell in the past, Scott Maydell also on from Russell, discussing their kind of viewpoint on the new Russell Vol products that you guys have launched. But of course, you guys over at CBOE are partners in this product as well. So why don't you give me your take on kind of the thought process behind bringing this product back now?
Okay. Yes, we did bring it back. At one point, CFE had listed Russell VIX, or Volatility Index Futures. 2008, I think, forced a lot of folks to kind of entrench and kind of go back to doing what they may have known best, and that was probably benchmarking to S&P. And whether that meant that Russell lost its luster or people were just focusing on one benchmark, I think that remains to be decided. But hey, face it, Russell Volatility Index Futures were our second most active product for quite a while. And as more familiarity around trading volatility has taken place, we felt we owed it again to the marketplace to introduce another Russell, or bring back the Russell. And knowing that there are a fair amount of people who not only benchmark to Russell, but are looking to take advantage of disparity between these various index levels. So you can talk about the correlation between Russell and an S&P, but there are periods where they do diverge. And I think that's where the real opportunity lies. You can play one index level against the other. And for me, it really comes down to is that the educational effort has worked and that there's more familiarity with why and how to trade volatility. So our repartnering, again, with Russell, I think is very timely. And while the volumes we've seen aren't quite on par with the S&P VIX, we have high hope that the Russell Volatility product will exhibit those legs and the strength over time.
Yeah, you're right, because it has only been a few months, so we still have a limited time horizon to see how this thing unfolds. But so far, at least from an options perspective, I haven't been looking at the futures too heavily. From an options perspective, the open interest is encouraging that people are actually starting to utilize this thing. And I guess if everything unfolds as planned, that the plan down the road is to maybe take a similar approach to the Russell stuff that you have with the S&P VIX, which is maybe add a nearer term, shorter duration type product and do similar steps like that? Or am I kind of getting ahead of you a little bit there?
I think you're getting ahead of me. If
allow me to plant the seed, then.
I would think that eventually over time, once the futures start to show some stronger legs, and really are keeping pace with the S&P product, why not introduce them on the overnight cycle as well? So maybe perhaps that would take place before the addition of a shorter term Russell product. So frankly, we haven't had those discussions yet.
Jay, we could sit here chatting about these new products for quite a while, but we do have to get rolling with the rest of our show. But before we go, I know there's a lot of our listeners who really fall into that hardcore part of the spectrum who would just slam their podcast player down or their iPad down if I didn't ask you about at least the status of what you guys have going on with variance. Of course, you guys have taken a lot of interesting tilts of that windmill in the past and trying to bring that into a more listed environment. Of course, the OTC variance swap market is just a wild west. So anything you guys could do in that sense, I think would be interesting. So give our listeners an update on the status of that.
Okay, the quick skinny update on it is, and hopefully the listeners know that we went through several modifications to make the product look more akin to OTC variance. And where it lies now is that we are working with, or not we are working, but we are waiting on OCC to present us with a new margin model. Because the margin comparison between OTC variance and a listed variance kind of weren't on the same page, so to speak. So we sat down with our business development, their business development research, and kind of laid it out and raised our concerns, and they had promised to come back to us sometime during the first quarter, hopefully by the end of March, the first quarter, with a new margin model for the variance futures, and we'll see, and if it's more akin to what folks see on the street, then I would expect that all the initial chatter about coming to the listed variance product will bear fruition.
Well, they say the devil is in the details, and when it comes to variance, that seems to be quite literally the case with that product. So many different nuances to get that thing exactly right. Well, Jay, I'm glad you can join us on the show today. And before you go, anything else you want to leave our audience with? Any hints, any teases of what they can look forward to coming up over there at CFE?
Thursday, February 13th, VXST, VIX short-term, 9-day based on SPX weeklies. Look for it. Watch it.
I don't think you need to remind our audience about that one, Jay. I think they're waiting with bated breath for that one. I think a lot of them will be amongst your first customers there next.
And I'll
Thursday.
see you next week. And in fact, if there's any of your customers in the local area, Mark, we're doing this meet and greet with Russell next week, and we're actually bringing in a representative from Jane Street, who is the DPM for the Russell Volatility Futures. So again, if any of your listeners out there would like to join us for a little presentation and a meet and greet and interact with some of the floor folks, point them my way, or Mark, you have the invite, forward the invite out, and we'll get a nice audience.
Yes, of course, I will be there. Jay will be there. Quite a few people will be there. So if you're interested in learning more, seeing this stuff kind of presented in person, have a little beverage with Jay or so, then you know how to reach out to us here on the show, and we'll provide you with information about how to get to that. And Jay, thanks again for coming on. We'll have to bring you back on again down the road. We can look back on some of these things like VXST. I think you and I are going to be talking about that in the near term.
We will. We'll be covering it down in Boca too, right, Mark?
I think so. All right, Jay, good talking to you.
All right. Thank you. Bye-bye.
All right, and that is going to do it for our Volatility Viewpoint segment. And now we're going to keep on rolling right on into our final segment, the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the Crystal Ball.
All right, everybody. Welcome to the Crystal Ball. Hopefully you know by now what this segment is about. If you're new to the show, I know a lot of you are. This is, of course, the portion of the show where we prognosticate wildly and without reason into the future of volatility. And certainly an interesting time to be prognosticating right now. We're in some crazy, crazy waters from a realized and an implied vol perspective. Of course, this time next week, we'll actually have a new tool in our arsenal, the aforementioned VXST. I know a lot of you guys are going to be eating that up. A lot of you guys love the weeklies, including the SPX weeklies and the SPY weeklies, and even VXX. All of those feed very neatly into trading against the and hedging with and kicking with the VXST. So it should be really interesting to see how that stuff unfolds, and going forward, how that product perhaps impacts the big VIX as well. You looking forward to seeing that as well, Mr. Sebastian?
Oh yeah, I mean, I think it'll be really interesting to see how how paper flows, how the thing moves around, all that stuff. I think it could be really. I'm going to be really interested to see how players trade that term structure.
I had this conversation with Jay, and maybe I'll put it to you too as well, because I'm kind of curious. The traditional use case for weeklies of all types is, of course, premium selling. That's what people have adopted them for. But VIX, of course, predominantly falls into the premium buying camp. So you think these near-term VIX traders are going to be buying premium, or they're going to be trying to blast it out like everyone else does with weeklies?
I think it'll be really interesting. That is going to be how I don't know. I think you'll definitely see a lot of hedge funds in there selling that curvature. But the problem is there's such a blowout risk in that stuff that you're going to have to tread very carefully. I actually see it as an event hedge. So, until it'll be a way to play volatility into something like a non-farm payroll, or a way to hedge off volatility from event risk. So I think the market's going to move, but I want to make money whether it goes up or down, not just if it goes down. So I buy an S&P straddle, and then I hedge off my Vega with VXST into a number.
Yeah, that's certainly the perceived and ideal use case for it. Is it some sort of event type risk? We'll see what the market actually ends up doing with it. That was the use case for weekly options too, and it hasn't really worked out that way. So we'll see.
No, I mean there are definitely people that use the weekly options into things like the non-farm payrolls that had yesterday, short-term hedging solutions. It can make a big difference. So even though the primary use is selling, there is plenty of people that end up buying weekly options at certain points.
That's true. There are some premium buyers around, like non-farms, like we saw this week and things like that.
Yeah, or earnings, things like that.
They do get washed away by the overwhelming tide of premium sellers, but they do exist. You're right. They do exist. It'll be interesting to see how this new product unfolds. And, of course, looking towards the broader vol landscape, you think this time next week we're still hovering around the 15 handle, or are we off to the races again?
It'll be interesting. I mean, when is the next shoe to drop in the emerging markets? That's the big question. And if we get a big shoe drop, then who knows when? Who knows? All right, who knows? It could be. We could see the VIX at 20, but I think you're either going to see the VIX a lot lower, or you're going to see the VIX somewhat higher. That'd be my bet.
Yeah, I think somewhat higher is the key there. I think we clearly saw resistance, in those levels. We didn't get the pop a lot of people may have wanted. If we didn't get it this week, it's going to take a lot to really push us into, let's say, a 25 handle or beyond.
Yeah, well, the Japanese currency trade came off, and so people have had the carry trade back on. As soon as that thing starts to get ugly, you're going to see the VIX pop. And, we're now testing up against the 50-day moving average in the S&P. That'll be the next big fight for a floor versus ceiling in the S&P 500.
Yes, and of course it'll be fun this time next week to be able to look back on a couple of trading days of VXST and see how that's playing out in the marketplace. But unfortunately, that's all the time we have here for the Volatility Views program. Let me thank Jay Caauwe from the CFE for joining us on the program today. Let me also thank you, Mr. Sebastian, for joining me on the show today. Before we go, any interesting updates you'd like to share with us from coming down the pike, either from Swan or from Option Pit or any other things you have?
Yeah, Option Pit has something exciting coming down the line that I'm not allowed to talk about yet. And Swan, the roadshow continues with our reinsurance corp. I can't talk too much about it, but it's a very interesting product that we're coming out with. And, you should, if you're not familiar with the reinsurance business, I think everybody's going to be familiar with it. Every family office is going to be familiar with it in the next couple of years.
Yep, if you'd like to learn more about that stuff, check out swanwealthadvisors.com. And while you're surfing, check out russell.com for a lot more information on what we're talking about here, about RVX and the futures and the options and some of the plans they have in store for that small cap vol suite, because there's some interesting stuff cooking and coming on down the road. So check it out over there at russell.com. And on behalf of Mark and, of course, all of our guests, let me thank all of you out there in the listening audience for downloading and streaming and subscribing to this program. Be sure to check out the app. I think you're going to like it. Available in all of the big app stores, Amazon, Google Play, and, of course, iOS. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.